Cryptocurrencies have emerged as a revolutionary financial asset class, offering unprecedented opportunities for individuals to generate income. Bitcoin, the first and most well-known cryptocurrency, along with a plethora of altcoins, provides various avenues to make money. Whether you're a beginner or an experienced investor, this guide will help you navigate the crypto space and maximize your earning potential. Understanding cryptocurrencies. Cryptocurrencies are digital or virtual currencies that use cryptography for security. They operate on decentralized networks based on blockchain technology, which ensures transparency and security. Bitcoin, created by an anonymous entity known as Satoshi Nakamoto in 2009, paved the way for the creation of thousands of other cryptocurrencies, collectively known as altcoins. Ways to make money with Bitcoin and altcoins. There are several strategies to make money with cryptocurrencies. Buying and holding, HODLing. HODLing is a long-term investment strategy where you buy cryptocurrencies and hold them for an extended period, waiting for their value to increase. This strategy is based on the belief that, despite short-term volatility, the value of cryptocurrencies will rise over time. Steps to HODL. Research and choose cryptocurrencies. Focus on well-established cryptocurrencies like Bitcoin and Ethereum, as well as promising altcoins with strong fundamentals. Secure your investment. Store your cryptocurrencies in a secure wallet, preferably a hardware wallet, to protect them from hacks and theft. Stay informed. Keep up with the latest news and developments in the crypto space to make informed decisions. 2. Trading. Crypto trading involves buying and selling cryptocurrencies to profit from price fluctuations. Unlike HODLing, trading requires a more active approach and a good understanding of market dynamics. Types of trading. Day trading. Buying and selling cryptocurrencies within a single day to profit from short-term price movements. Swing trading. Holding on to cryptocurrencies for several days or weeks to profit from medium-term trends. Scalping. Making multiple trades throughout the day to profit from small price movements. Tips for successful trading. Learn technical analysis. Use charts and indicators to analyze price movements and identify trading opportunities. Manage risks. Set stop-loss orders to limit potential losses and use only a small portion of your portfolio for each trade. Stay updated. Monitor market news and events that could impact prices. 3. Staking. Staking involves holding cryptocurrencies in a wallet to support the operations of a blockchain network. In return, you earn rewards in the form of additional coins or tokens. Staking is typically available for cryptocurrencies that use a proof-of-stake (POS) consensus mechanism. How to stake. Choose a staking platform. Use a reputable staking platform or wallet that supports the cryptocurrency you want to stake. Deposit and lock up your coins. Deposit your coins into the staking wallet and lock them up for a specified period. Earn rewards. Receive staking rewards periodically based on the amount of coins you stake and the staking duration. 4. Mining. Mining is the process of validating transactions and securing a blockchain network in exchange for rewards in the form of new coins. Bitcoin mining, for example, involves solving complex mathematical problems to add new blocks to the blockchain. Steps to start mining. Choose a cryptocurrency. Decide which cryptocurrency you want to mine. Bitcoin, Ethereum, and other altcoins have different mining requirements. Join a mining pool. Combine your mining power with others to increase your chances of earning rewards. 5. Yield farming and liquidity. Providing yield farming involves lending or staking your cryptocurrencies in decentralized finance, DeFi protocols to earn interest or rewards. Liquidity providing involves supplying cryptocurrencies to decentralized exchanges, DEX, to facilitate trading and earn a share of the trading fees.